G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Be sure to check out my links below, including exchanges I use and social media content that I post. Alright, let's go. So the topic for this video, we're going over the Bitcoin price versus the altcoins as well, seeing how they're holding up. And some dominance charts, and we'll just start with the fear and greed to kick off the video. So the fear and greed index for the crypto market is at 34. Okay, and yesterday we're at 39. So we're fearful, but not as it's like today's 34 compared to 39. But strangely enough, the market has rallied. So it's quite weird how the market's rallying and the fear level actually got more fearful. It's dropped. So which is quite unusual, as you can see on this timeline here. Going back to July 25th of this year, and we got 70. If you want to go back even more, a year, from basically this time last year, we're at 40 in the fear and greed index, and we obviously tracked higher, grinded higher, and got to the 70s, 80s. We had a bit of a sell-off, and we thought that was going to be further downside, but it wasn't very long before hovering around the 50 level that we just get a spike straight back up, and all-time highs of Bitcoin around early March, and we got to 90, as high as 90, which is very, very, very high, extreme greed. And I knew from that point that we couldn't last much longer, and we had to get a correction from there, and we did. And this has been tracking the price pretty well. It's going up and down. And we had a push up here when the Bitcoin conference happened and Trump talked about it. I said to people on my channel, I said, this is probably it. We're at the top of the channel and we're going to correct back down to the lower part. And that's what happened. I didn't think it was happening so quickly, get to 51K from like the late 60s up here to early 50s. But it happened so quick, the blink of an eye. And then hovering back up a little more. So at the 30s, we're still sort of below 50 and the fearful territory, even after this recent, yesterday's session, which is quite very, very bullish, after the Fed spoke at Jackson Hole Symposium, and it sent to the market that the Fed are ready to pivot. They're ready to start lowering rates as they see labour market starting to be even cooler. Well, starting to cool off even more. And then the inflation's heading towards 2%, so they're confident in that, and they're seeing unemployment continue to rise. So the market took that as bullish because of rate cuts, but it's all about severity of the cuts, how many cuts you're going to get, and the magnitude of the cuts. So they're 50 basis points or 25 basis points. That's important to know. So this is the fear and greed, and yeah, we are tracking in the sort of downtrending, so it is trending lower, but nevertheless, it went down as low as 17 in early August, and we're at 34 now. Okay, so is that. Here's the Bitcoin price on a 3-day time frame. And as you can see, we have broken this resistance line at 61K. All right, I did say this will be strong resistance, and I was not wrong about that, but I was wrong about it rejecting and going lower. But there was a video I did mention that if we do deviate above this level, it can still come back down, okay, and head back lower. That is a possibility, all right, because there are possibilities out there and probabilities, if you want to call them that too. And yeah, so that is where we're tracking. We've broken this mid-level, this channel, down-sending channel. And whether we go up, down, I have no idea. The best thing to look at to really track what we need to see for it to turn bullish, because we're at sort of neutral at the moment, is the Almighty Bitcoin bull market support band. As you can see, 61K was the EMA in green line there. And we obviously crossed here, crossed bearish, and the SMA went above the EMA. And then it's starting to turn down pretty sharply. So that's suggesting that, you know, the bearish momentum is picking up. Especially when we saw this resistance here. We struggled to get above since early August to now. breaking above it now, of course. And we're wicking slightly here, and we're looking to find resistance at the SMA. So I need to see a close, and you go on the daily as well if you want to see it a bit more clearly. The daily there, the 1 day candle. Bitcoin had a great day, and it's 7%. So fantastic day for Bitcoin, crypto market. But we need to get a close, all right, above the SMA, and then come up, and then we'll probably retest 61, back test it as support to continue higher. So a nice durable close on the daily and a back test. And then you need to approach this channel, all right? So you got 1 touch, 2 touch, 3, 4, 5. Okay, and the 6 touch. Ultimately, you break, head to this top resistance level, the 71.5K, and then you back test this channel and then head higher, all right? And then head to left translated cycle theory by the end of the year. And I don't know how high it's going to go, but somewhere in the 100K range is where it probably most likely will top. Okay, I have no idea, I have no clue, but it's all about the recession and the Fed cutting rates aggressively versus softly. And if they cut aggressively in September, 50 basis points or more, then I think it's not going to be good for the markets. I think it's going to be bearish, and that'll be it. Or if they cut by 25 basis points, a nice soft cut, it'll be great. We're signaling that they're not overly, what's the word? They're not overly pessimistic, okay, about their assumptions of the data and the unemployment rate rising. And it's the labour market. It's really getting them to decide when they're going to cut, because inflation is heading in the right direction, so they're happy with that. But it's the cuts that will be response to unemployment. All right. So that's your left translated cycle theory. But if we do reject here and do not close, and we do come back down, all right, without a close above the SMA, and durably break again, and head back down to this 51K, as it came back pretty aggressively here, and obviously this cluster here, I do think it won't go higher, okay? I do think it's heading down to 41K eventually, because this is a upward sloping trend line. We have 2022 lows here, 2023, and now, okay? So that is that. On the Bitcoin price and what I see, depending on what the Fed has to do, and it might be politically pressured. They could be politically pressured. That is possible. Okay, because I did hear in an interview with Joseph Wang, who used to work at the Federal Reserve, and he says that these Fed members, majority of them are Democrats, and they could be definitely politically pressured to favour that party. I don't know exactly if that's true. He's not in the circle anymore, but that's what he's suggesting. And they could keep the party going a bit longer and keep the markets higher until the election's over. So this could be bullish, or do nothing, Bitcoin, until the election's over. Then we'll really decide where we're heading, because the result is in, and there's no excuse for the markets to move in one direction or the other. So that is that. Bitcoin dominance. Okay. Keeps on chugging higher. All right. Bull market support band, and just keeps going higher and higher and higher. Okay. And look at that. Big day. 0.77%. So really it was Bitcoin's day, not the crypto market's day. And we just keep chugging higher. And if you go on the weekly, it looks more obvious. There's no downtrend here. It just keeps chugging away. And it's just been grinding. Because I'll show you why. This is happening. This one. It's because of the Fed balance sheet is reducing. So, of course, Bitcoin will outperform. Low-risk assets outperform high-risk assets. So that is what plays out during these forms of QE. So underperforms in QE, Bitcoin does, and outperforms in QT. You had the mania phases here, and we haven't got one yet. So we're not in alt season yet, okay? So we need to see a big decline, or a downtrend at least, okay? On the weekly, like a nice downtrend. It's lower highs and lower lows. And yeah, that'll be it, like 2019. Before the Fed start to pivot to quantitative easing and start buying up bonds, but that hasn't occurred yet. So it just keeps rolling down, and we keep grinding higher. As it's not hard to predict this stuff. It's when they start, buying back bonds, and they see some weakness, if it's either the job market or some other weakness in the banking sector, for example, they will respond to that. Okay, and that will be the top for dominance. I do see it going up to 60%, which is this breakdown period, and also it is 61.8 retracement there at the bottom of this box. All right, that's where I see it going. Very common retracement level, and we could go a little bit higher and deviate 63%. Okay, but just this box, this range roughly, is where I see it before. It's the balance sheet. That's what I'm watching. We'll mark a top, thereabouts, not perfectly, but be around that period when they do that. That's the markets will look to shift from low risk to high risk assets, and that's Bitcoin to altcoins. All right. Others dominance, and interesting with others dominance now. I'll get rid of the bull market support band. Is this trend line has been very, very good and accurate. So going back when it formed, it was pretty much formed in 2017, the start of that year, and because after it touched twice, that's when the trend line is established. Okay, so December 2015, it touched it. So others is outside the top 10. We bounced off it aggressively there, and that was QE. All right, so QE, it outperformed Bitcoin. And then QT happened, and then it obviously downtrended, and we came close to the trend line. We didn't touch it. We bounced off it because QE happened. So QE, and then shot up, and then it came back down. There was that weird random drop there in others dominance. Can't really explain that one, but happened, and we touched the trend line, and we shot back up aggressively because we're in QE. Okay, so it outperformed Bitcoin. We topped when QT happened, came back down, and we touched the trend line again in 2023, and we bounced, and then we came down. Okay, because we're in QT, so we weren't going into a mania phase yet. It's going to always be downtrending until the Fed pivot. All right, and now we're touching this trend line again, and we have seen a big rally. All right, this is the weekly time frame, so yeah, it has respected this trend line, and it's happening again because I thought it was starting to break. I'm like, here we go, it's going to fail here, but it hasn't. It's grinding higher as expected because it's been a very reliable one for very many years. And let's go up again, go to USDT dominance. And you had this projection here, it was 51K, of course, Bitcoin. Had the rejection this level. I had an aggressive sell-off. This is the weekly. And it's the same thing. It's this trend line, okay? And it's been respected from, its first touch really was 2019. If you wanted to count this one, it was steeper, but it did break down. And we did, the mean is here, the average between these two. If you want to, I started drawing it from back here, okay, and we did come back and touch it, and it has lined up with all these bottoming out periods in USDT dominance, which is the top for Bitcoin, intermediate tops. Okay, this is Bitcoin tops. So topped here at the end of 2017, the bull run, and 2018 for this aggressive sell-off, end of the year, and it shot back up. Dominance did USDT against Bitcoin, and then Bitcoin corrected in 2019, of course. And then you touched again, shot up. Almost touched it here in 2020. And then boom, shot up. And then came back to it again. Back to 2021. And he topped for Bitcoin in March this year, and then it's been grinding higher. So it has worked very, very well. I do see it coming back and testing support probably before continuing its journey higher. So I don't see this left translated cycle. I just see it playing out like a normal cycle and just trapping a lot of people. This recent move, I think that we're on now, but I don't think we are. I don't know. Time will have to tell, because if it's based on the election and they're trying to prop up the candidate, Democratic Party, or I think they're favouring Trump. They're favouring more Kamala, and they'll keep the markets high and elevated until it's over. So it could really do nothing for that period. And quickly show you the DXY. DXY has been interesting, and I haven't made a video about this since it really got to approaching its highs here in April this year and June. Try to rack up there, and I didn't really make a video since then. So it's been downtrending ever since. So it's been bullish for risk assets, the dollar, weakening dollar, but we're still in this range, okay? We are breaking slightly below this line, but there is 101, but there is also, if you want to count, it's really below. It's around here, 99 to 100, roughly 100. So this really low point, that deviation. If it does come back down to there, it's not the end of the world for the dollar, and it's devaluation against world reserve, other world currencies. That's what it is. It's the basket of currencies. And the dollar is the US dollar. But if it comes back down here, we can still shoot higher. Okay, it's not the start of the bull run, the altcoin season, because the mania phases do occur when the dollar index just collapses, falls off a cliff. That's alt season. That's alt season. Okay, so the alt seasons, as you can see there, the 2017 and the 2021, right? And that is when the mania phase and the exuberance, it's the absolute greed kicks in. But you need to see, like this is 2015, right? Going into 2016, and we see some chop, right? Sideways, did nothing. We broke down. It was a false breakdown. We shut up, and then we started grinding higher. Unusually, you thought this is the start, and it didn't. It grinded higher until it broke and faked everybody out, and then it shot right down. It had a trend line. It broke this trend line here. Okay, that was the start, May 2017. It just took off from there. Is something similar happening right now? You've got sideways chop, sideways chop, and then it fakes out like this one right here. It comes a bit lower, fakes us out, okay, and then it comes up and starts grinding higher. Comes up higher, and then eventually just breaks down, all right? Just goes down really hard. And that could play out the same as 2016, 2017. It's more similar to that period that the dollar is tracking. Whether that plays or not, we'll have to wait and see. Not a certainty, any probability. Or it just doesn't play out like any of these and just breaks down. Just goes down from here, and the mania phase starts going into the end of the year, and then the blow off top, the stock market, every other, the gold, everything top, and then they'll crash, and the dollar will just collapse too because of the rate cuts. Well, the dollar should surge, but it can collapse too. Okay, it's not always in line. Okay, so it can grind higher when there's bearish sentiment in the market. It can also fall when there's bearish sentiment in the market. And I'll show you that. Okay, so I'll just overlay the S&P to show you what I'm talking about. It's not all the time that happens. It has to be uncorrelated. So it goes up and the S&P goes down, or vice versa. We've had periods where it has sold off here. Okay, so it has sold off right there, and the S&P does the same thing. It sells off. All right, so they do work in Limstech as well. And then, for another period I can show you. So here, they're both going down in the great financial crisis, right? That was trending down, the S&P, and then so was the dollar index, okay? So they can work in correlation or against each other. So it's not always in the inverse, okay? The dollar doesn't have to go up for it to be bearish. It can both go down and be bearish for the markets, all right? And same as the dot-com bubble, they both went down, okay, as you can see there. All right. Keep on it. You get the idea. But then they continued down, and the markets took off. So it's not perfect, all right? There's people in the crypto community and Twitter saying the dollar index is breaking down and it's bullish. The May phase is about to start because every other period, 1, 2, that's what happens. Yes, it could happen, but it could also be Armageddon, okay? Because it's all about the Fed. The Fed is more accurate in determining what they see in the economy, and the economy's weak and they have to cut to stimulate the economy. It's going to be bad for the markets, okay? It's just how it is. It's how it's always been, all right? That's just. I showed you a video yesterday, the unemployment rate versus the Fed funds rate, and how that works out. And the aggressive rate rises, and then they cut to, because the unemployment rate starts to take off to fight that, to bring it back down. And it takes a long, long time to bring it down. It doesn't happen straight away. I can't just slam rates, and then unemployment rate just all of a sudden tracks the rate cuts. It takes time to kick in. It's a lagging effect. All right, so that's that. And yeah, it's quickly ETH Bitcoin, and get rid of the S&P 500 for a sec. Now I just made up this chart, tracking the previous cycles, and had these breakdowns. This support level formed. All right, when it breaks, 53% drop. We come back up. This is QE, and it shoots back up, of course, against Bitcoin. And then QT happens, and then it bleeds to Bitcoin. ETH does. And it had a support again, same as this one. We broke it. We dropped 38%. And this trend line was pretty much formed then. So we didn't touch it here. And it was interesting that this, from this bottom in 2016 and the end of that year to the bottom in 2019, 120% difference, all right, that move. Fast forward, you had QE, it shot up, it outperformed. QT obviously didn't. It's been bleeding to Bitcoin ever since, and we're seeing it bleed, and continue to bleed, and bearish as well today. And what happens is we find a support level, this yellow line I've drawn, which is the same as this one and this one. We break down, and we're starting to see it drop against Bitcoin as it's played out previously. And this trend line, right, it's rising, and it's this box, so it's all lining up. And what's interesting is from this low in 2019 to where I see it going to the bottom of the box is exactly 120%. Same as this one, 120%. So quite interesting there. Very, 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 very interesting. That's that. Others, Bitcoin. Okay, real quick. And, had a drop back in this QT period in 2018 when the bull market topped to the high, down to the low. 67%, had a rise up, 65%, drop, 62%, which was these lows here, came back down to this bigger support level. All right, so this short-term support was broken, and this long-term was respected, came back down to it again here. And then QE, of course, outperformed Bitcoin, others did, topped when QT arrived, and then bam, it's been bleeding ever since. At top to this low, 68%, rally back up, 69%. So similar in the 60s, and then a drop at 70%, I reckon is going to happen eventually to these lows again, come back down and reclaim again. So I don't think this is going to be the bottom for others versus Bitcoin. I have a hard time believing that. There's a recession coming, but I could be wrong. Could be very, very wrong. I have no exactly idea. It's just a probability, okay? It's just comparing previous patterns and the periods that we're in, if they start easing sooner than expected, then this probably is the bottom. If they keep rolling off the balance sheet, then I see it bleeding even more. It all depends on the Fed. All right. It's the same as that Bitcoin dominance chart I showed you with the balance sheet, and we're seeing a bounce, and it's outperforming, which is good for people holding those others coins, but very too risky for me. And total 3 minus USDT divided by Bitcoin is the inverse of Bitcoin dominance. And this is breaking down from this support line, same as 2019. And it was 1 month before the rate cut. Bring up interest rates. And so 1 month before the cut happens, and it just broke down from support. And then a cut arrived, and we're not far from that cut. We found a bottom, and QE arrived, okay? And that was the bottom for total 3 against Bitcoin. 1 month before the rate cut, potentially in September is going to get a cut. And then we close below we don't reclaim this, and then we bleed to hit this bottom band at 0.25, which is 25% of Bitcoin's market cap. Total 3 will get down to. So that's my targets for those ones. And that is that. I hope you enjoyed that video. Just going over the fear and greed index, seeing that though the crypto market had a good day from yesterday to now, 7% move in Bitcoin, outperforming the rest of the market, but everything else is doing pretty well, of course. And you see the fear go lower when the market's rallying. How's that possible? How's fear going down when the market's going up? Quite strange there that day that occurred after the Fed speech at the Jackson Hole Symposium. So the markets did like what he's saying. And he was saying that it's time for policy to change. So basically saying that the pivot's going to come and rate cuts are going to arrive because of what they're seeing. They're seeing the job market not holding up as better as they thought. And the inflation rate is going down drastically towards their target. And an aggressive drop from the high in 2022 of 9%, and it's been plummeting down, and then it's been sort of stagnant sideways for from June last year to now 3%, and now it's sort of come below 3% and heading towards 2%. So the Fed's liking that data, and they're not confident with the job market, so they have to respond to that before it gets out of hand and the unemployment rate just skyrockets. I do think it will skyrocket, and it's going to happen like every other time. I've showed it in this video, the last one I made, talking about the Fed funds rate versus the unemployment rate. It's very fascinating to just look back in history, see what has occurred, and you'll see for yourself if you watch that video, okay, what will play out. So recession is coming. So wait for negative GDP numbers to come in too. So that's another factor that I'm waiting for, the US. And we also looked at the Bitcoin price, bull market support band, seeing that we need to break above 64K and get a daily close above it, and then retest 61K, and then continuation to the top of the channel, and then eventually breaking 71,500, the highs, and then boom, off to the mania phase at the end of this year, which could play out, okay, guys? It's any possibility because they could be propping up the elections and Democratic Party to make Karma look better than got his hopes. And yeah, what is really the reality of the situation and the economy, and just make it go up for political reasons. I don't know if it's the reason, but it could be. It's a theory, or it's just the fact that people are liking that the economy is stronger than expected because we haven't seen these negative GDP numbers, and yes, we've seen a slowdown, but not as bad as we thought, and it's taken so long for the Fed to cut, and I think the people are just relieved they're finally getting cuts, and I think it's bullish, but no, I don't think it's going to happen. But anyway, that's just happening. And then we looked at old Bitcoin charts and the dominance of them, and the USDT dominance and the DXY, and yeah, we did some analysis on that and the S&P comparing against DXY to show that DXY going down is not always bullish for markets. It can be bearish. As you can see in the financial crisis, GFC, and the dot-com bubble, is that the dollar just collapsed, and so did the stock markets. So sometimes it doesn't work inversely correlated. It can be both correlated when the worst comes to worse. And yeah, that is the worst times. And I think Bitcoin will track well if that's the case this time around. So that is my analysis. And yeah, I hope you enjoyed it. So if you like this video, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out my links below, and I'll catch you next one. Cheers.